There we go. Okay, good morning, all. This is Fadi Hamzi. It's about 8:50 a.m. We're running about 5 minutes behind. On Thursday, the 16th of September, 2021. We had a strong move up yesterday. Again, this is the last night. Sundown was beginning of Yom Kippur. You sell on Rosh Hashanah, you buy Yom Kippur. This year, it hit it perfectly. So let's see how today goes. We're expecting a lower volume today because of the Kippur day, Yom's day. No, hold on, Joe, not there. In the chat, not in the, I'm sorry, not in the NQ, in the webinar, which I sent you a link for a morning brief. Okay, I'm actually going to mute the DM0. Okay. We are in morning. Go to webinar. Okay, so you can have both services going. Morning for the morning brief. Okay. Hi, Peter. How are you, sir? Okay. Very briefly, housekeeping and stuff. I'm going to be super quick. We have a few initiatives, I should say, in the works. One of them is putting a service in California on the cloud. Makes it much easier support time, like Nancy or Peter, when I need to go there and fix something. Well, it'll be done there. This is done for our front-end server. Will be also a new machine, new operating system, all that. Every 2 years, you got to do one of these to stay ahead of the technology. We're also going to bring ES in here, run the ES Zoom, just like we run NQ Zoom from here. I'm going to get a new computer, a new monitor there. And then we're going to see what we're going to do with CL. CL is on probation. Yeah, if we don't get more activity in the CL room, we're going to just abandon it. We just cannot run it negative like that. So, we have one person using it. He's a very good guy. He's making good money with it, but you can't run a product at a negative cash flow for very long. I mean, we've had it a couple of years, and it's been 1 or 2 people. Sending out with F-Tax. We discontinued F-Tax. So, all right, let's jump on Econ Calendar. Oh, we're also doing some search engine optimization, and I've hired a programmer for that. Local here in Florida, but highly recommended through 2 of my buddies with our websites, and she's been very, very good, a good marketing company. So they understand digital marketing really, really good. Okay, we're looking at now the Econ Calendar very quickly. Jobless claims at 8:30. Murray, there must have been a good number there. Look at what's going on in the charts. Okay, so let's jump to that report. We also had the Philly Fed and retail sales. Business inventories at 10. Where are the talking heads from the Fed? They're not there. Tomorrow, we don't have quadruple reaching tomorrow. That's wrong. Triple. There's no single stock futures anymore. Jacques. This is triple. Yeah, the first 2 months, the expiration is double reaching, and now this is triple. Remember, we lost last year about this time, single stock futures closed. Why? You know why? Because Marcus Esposito is here and not there. He was out of marketing over there. When he left, everything collapsed over there in volume. If you don't know derivatives, you can't have single stock futures. And you know somebody. You need to know what you're doing yourself. Okay, so consumer sentiment tomorrow at 10. Let's look at what the jobless claim came in today. Very briefly, just very briefly here. Okay, 332. Revised down 33. We actually went up 20. Okay, or so. 332. That was 310. Oh, I'm sorry, 312. That's right. So it went up. It ticked up at that. Okay. All right. Well, still pretty low, relatively speaking. I think last year it was low. Philly Fed, please. There we go. We came at 30.7. Whoa. Versus the consensus of 19.2. So compared to what we were expecting, they managed to hit it there. Okay. Robert, you're not there. Robert, you're not in the webinar. Robert, you're not in the webinar. Chuck, you're not in the webinar. Tatiana, you're not in the webinar. What are you guys doing? Come and join us. This is the Navy sailor. Thank you. Joe just came in. Bravo. All right. This is the downside of keeping that room open. You can't get in too fast as the email has to come back. Go to webinar is more structured than go to me. Going back, let's go next couple of one. That was pretty fair. How about retail sales? Let's look at that. That's probably to me that's the most important number today. Let's see what we have. Okay. 0.7 versus 1.8 negative, because this was 0.8. Oh, okay. Good change there. Okay. -1 was the consensus on the X vehicles. Came up to 1.8%, Murray. I like that, Murray. And -0.3 on X vehicles and gas month to month. These are month to month changes. Came at 2.0. Okay. It's from the Bureau of Census. So, all right. Tomorrow, what are you expecting for consumer sentiment? That I'm always interested. Yeah, I went out with a girl who started CPK. And that was the number she would look at. And so she would call it, Barry, what's that number? I said, Julie, good to work. She goes, no, I need to know what that number is. There's a lot of chains work off of this. This is the number that I want to watch. 72, range 70 to 75. Prior was 70.3. Keep that in mind for tomorrow. All right. Let's get the charts here, please. There you go. All right. We had a sell Rosh Hashanah by Yom Kippur play to the T. We bounced off of 1 sigma, and we partially, I think, I would say, if we, this is a feature I'm beginning to use now more. You can zero in here in that chart. You could see that we got very close to 50 bar. Did not hit it, but we got very close. Kind of jammed here, but it gained its loss back. Remember, we went, that's the Wednesday, yeah. We went long late in the day before the bounce on Thursday with the actual position. We haven't changed our bias. With actual trade position, we changed it there. And we got whacked a little bit, but didn't hit it on a stop and then rallied. We'll see what it does today. We got to be careful because of the Wednesday effect of expiration. You see a lot of times that retracement there. Why? As the expiration nears, your last week, your theta shoots up because last Friday you had 5 days to go. This Monday you had 4 days to go. Yesterday, let me say, Tuesday was 3 days. Yesterday was 2. Now we have 1 day to go. As you go through that, that creates havoc on your theta. And some scavengers come in, buy cheap options, but there's no cheap options. They're actually high. The nominal is low, but if you look at volatility and what they might imply they might be they're using, they're skinning most people. Occasionally you'll get one that jumps at you, but we'll see. So sometimes what they do is when they were bringing it down, the calls were getting worthless. Those who had bought calls earlier, last week, a couple of weeks, and held on. And then we get to this point, they want to make the puts go away. You drop down, they reverse it. So you get, hey, the flow wants to have control. They have money on the table. Gigantic amount of money, not a joke. So that's what you're going to see here, most likely. We're pulling up on CI diff. You notice that? That's good. We pulled up on Brett Trust. We definitely pulled up on McKellen on both sides. Okay? Again, to me, this is it. And Ken Simmons would say, if I can just look at CI diff, I can tell what the price is. Because this tells you the whole, it's like basic acceleration, think of it in terms of concept. You got physics. Distance traveled, velocity, that's a CI. And then you have acceleration. Now we're accelerating up, slowly but up. Okay, let's go to DT quickly. We're getting to some serious support areas. We have to hold on to these. This would be a bad news for transportation or Russell to break these levels. You want to look at 14,195 and 21,97. And even after on the Russell, you had the upside bar. You got that bar. Outside bar is tagged. We reversed yesterday. So let's see what happens here. Again, test of the 50s. The trenders, one is negative. We used to be 2 last week, remember? S1W, SP1W, we pulled up a little bit on Momo. This a little bit faster, obviously. SP1, below, forget the scale. Below 1 sigma, we're not getting any volume, any 52 weeks highs or lows. There's a short signal there and still holding. We're longer weekly. So weekly long, daily short. Okay. VIX, very quickly, we're still elevated. We're above center line, the fair value, around like 18, about 18 and a half. Again, too high where we are on the charts in terms of time high. SQ, my favorite indicator, is pulling up. Okay. Back to 0.6 and 155. Remember, design limit is 100 to 150. We have violated one big time. We have never tested 100. That's the all-time low. At least the look back period, which is, I believe, it's 901. I gotta go. What is it? Okay. We're going back 4. Why don't we put 7 on? Hold on. Let's put 7 on. So 7 is a magic number. Let's see. All right. Same values. Yeah, not broken that. Yeah. Okay. So, what's the read on SQ? Fair value. Toss up. No signal per se, but we're still under this regime. That new high at 170 was alarming. Remember, there's a look forward window there of, I'd say 6 to 10 weeks historically. It could go a little bit longer before you see the results, but at least you will see some movement. I don't see any movement up there. It could be the underlying economy is fairly strong. It's all perception. That's what people like. Okay. Nice W there. W. Nice W here. No, this is not 43. No. This is our simple little friend called W. So we should be heading up. We should be going to 75 area. Historically, this indicator has been one of the best short-term swing indicators of bearish, high fear area versus high greed area. And so we're bouncing off of the fear area. As far as the big spread, we are using long October, short January, because as far as VIX is concerned, September is done. And also, we want to be 1 week in advance anyway, because that's how the big boys shift early. So, all right? Nobody wants to be caught in a rollover, especially for VIX. Right now, that value is 3.06. This is live. It's happening right now. That tells me that we are heading. Most likely, this number is going to get bigger. That means we're going to be heading up. Most likely, that's what I'm reading here. If it was at 0, that would be a bottom. I tried to get to that area. You could see that divergence splits. So that's what I look at. Treasuries, all quiet and Midwestern front. Yes, and also Eastern. Both Eastern and Midwestern front. So both Chicago and New York are mum about inflation so far in the yields. And our benchmark 10 years at 1.34. Okay. Next. I don't have anything there. Okay, up and down volume. You guys had a good day. So yeah, leave you guys alone. You do good. 74 and 67. This is the up and down volume ratio by Larry, courtesy of Bo Natwick. And here is the system, courtesy of Mr. Peter Cook, our learned moderator here. And we appreciate your contributions, sir. I just modified just the coloring and marking on that on the short side, so I like a two-way market. Just see what the system does. Okay, long here. Oh, 1 second. Come on in. I'm on it. Hold on 1 second. Hold on. Contract. Anyhow, we'll be quick. So here's by buying index. This is a collaboration, and it's only possible really with the indices that Tracy has. Okay. All right. Now, next, what do we do? What's my list? We've done PMT there overnight. Let's look at what we've done here on overnight, and then we'll wrap this baby up. All right. Here's our overnight chat on the screen. Hold on. We're up what? 2.5. Okay, 2 and 38. This was all in my view retail sales. Retail sales came to risk. Okay. Any questions for me? And remember, consumer confidence tomorrow. There was another data today, but as I said, I'm not too impressed by it. Let me go here. Worried about it. Let me put it this way. Oh yeah, the business inventories, yes, agreement, but that's coming out of 10. So remember, expiration weeks should be easy. Oh, one more chart I forgot. I'm sorry. There you go. I know some of you guys want to look at that. I see it in some of your emails. Okay, let me close this. Okay, here we are. Notice how far these divergences were there. And finally we took that dip. I don't see the conversation I'm having some of the more sophisticated investors. They're worried that there's a big drop coming. I don't see that. We may have some adjustment to do between now and, let's say, Halloween, but I don't see anything big. And, of course, I'm here on a watch for the PMT signal because we may interrupt it early. We have a decent, I think we'll take it. It's anti-money call spread. So. But notice on the number of percent of stocks above 200-day moving average, it's just sinking. And part of it is we're not up there challenging it. If you don't feed this, the numbers drop. So, and you got to see what kind of we were at 98 almost, 97, 98 back in, back in April. And we have been, this number has been getting less and less. Now, look at the separation between moving averages. I brought that up before. It's crucial to understand that separation. It's an early warning where things are going to go. So very, no different than DMZ. The DMZ does the same thing. You see that separation open? That means you're accelerating really, really fast. So heads up. Any questions for me? I was trying to finish at 9:15, it's 9:07. But my contractor is here, I got to jump before the market opens. All right, I'm going to close this and we'll get back there on the regular program, on the other channel, the other network. Yes. See you.